Hello. Thanks, Scott. Hello, Andy.
Hey, Scott. Hello, Steve.
All
How are we
right.
today?
Hello, Trade Ideas users. Happy Tuesday. Thanks for tuning in to our webinar. I've got the questions panel up. I'll try and keep an eye on that, but Andy will keep a closer eye on that while we get going here. So, sounds like everybody can see and hear the screen, so we'll go ahead and get started. The Trade of the Week disclaimer, as always, we're a software publishing company, a subscription company. We are not registered investment advisors. We're not brokers. We're not in the business of helping people with their personal finances. So please do not construe anything you see or hear in this presentation as it is not intended to be investment advice. Just some opinions and some ideas on how to use this really cool software. This slide is going to be here for the next couple of weeks because we are really excited about the third annual summit. This time it's going to be in downtown San Diego, high above the water and the other buildings. And we've got some great speakers, including Dr. Brett Steenbarger, who is a very smart clinical professional when it comes to trading and the psychology of trading. So he's built himself a nice niche, creating that for himself, as well as Brian Shannon was our keynote speaker last year. He'll be returning, as well as JC Peretz. Both Brian and JC are chartered market technicians, CMT, very smart guys, very wise in the ways of charts and technical analysis. So October 20th, it's going to come faster than you realize, so make a note of the link at the bottom of that slide there and inquire about tickets, because it's a limited venue. It's a very special venue, so it's limited. Seats are limited. You probably don't want to procrastinate this. All right. Quick note on what we do here Monday through Friday. We have a vibrant community of traders, and we also have a wonderful group of users under the Trade Ideas umbrella, which continue to allow people to learn the product quicker than we ever could in the past. And some of the ways we do that are of course, the live trading room. Barry is on vacation this week. He'll be returned next week, and he's the man for that room, but he's entitled to a vacation every now and then. I believe the room is open, but it's moderately active right now. But from bell to bell, Monday through Fridays, he's in there trading his own account and moderating a very large room, hundreds of people, showing and demonstrating the product, and allowing a couple of really good traders in there as well to kind of take the lead and point out what's going on in the market in real time. And all of this is free, which is a great price. A lot of other companies try to emulate what Barry's doing over there, but they have overhead to cover, and they charge you $99 a month. And we don't do that. We want you to come in, kick the tires, ask some questions, and get a feel for what's going on. So there's that. There is the afternoon webinars like we're doing right now, 5 p.m. Eastern, Monday through Thursday. You can see the list. Yesterday I was helping Jamie, and today Andy's helping me. Tomorrow, the CEO, I think Brad's out of town as well, but it's always nice to hear the Wednesday Q&A demos and see what's coming next around the corner from the Trade Ideas mad scientists, Dan and Brad. The trading studio tomorrow is with Andy. He'll come up with some great content for you Thursday, rather, along with Jamie. And then Friday, notice at the bottom of this slide, Friday, the support session from 11 to 2 Eastern is a 3-hour time block where we allow you guys to come in, and we're all there answering questions and demonstrating in real time. So it's a great place if you've got a few questions to hang on to those and then drop by during that time block on Fridays, and we can do some demonstrations for you and try and point you in the right direction. And then aside from all that, the very next slide is TI University. We used to do one-on-ones, but we're getting too big, and the product's too popular, and there's too many people, so we have to go to a group environment now. So we've broken it up into a 4-day course, starting off with the simple stuff on Monday and ending with the more advanced stuff on Thursday. So if you haven't done that, consider that a useful tool to really help, once again, get you up to speed on the Trade Ideas platform. So all those ideas, together, and that concierge type service allows us to, entertain a really nice user subscriber growth, as indicated right there. So that's it for the pre-canned stuff. As usual, man and machine is my theme for this webinar, and Paul Tudor Jones, who, by the way, employed Dr. Brett Steenbarger, who's going to be speaking at our October 20th summit. He exclusively wrapped Dr. Steenbarger up for just themselves. You know, he was, and he'll talk a lot about that, I bet, during his presentation. But Paul Tudor Jones, a great hedge fund manager, utilized the in-house exclusive service of Dr. Brett Steenberger for 3 years. Pretty cool relationship. But now he's back on the public circuit, and we're happy to hear him. So this quote from Paul Tudor reminds us that no man is better than a machine, and no machine is better than a human with a machine. And that's us. We're the humans, we're the traders, and the machine is our technology. I'll spare the IBM Watson lecture I did for the last couple of weeks, but just a reminder that AI is built to work with, alongside the humans, to give us a nice curated idea of what the best statistical probabilities are. It's not meant to turn everything over to AI and let them run the show and do everything, but we like to use the technology as a great complement to our brains. All right, so the agenda for today, as usual, do a market recap. Not much to be worried about out there. Andy's got some ideas to show you as a lower, quieter trade count today for the AI Holly, which is always significant in and of itself. The trade of the week, which is what the webinar is based on, is SIEN. We'll go over the color of that, how it was selected, and how it triggered. And then that kind of brought me to some content. I'm trying to keep it more trading content in these webinars, because I think that's what people do want to hear. And so I broke it down into the 3 trade of the week scenarios. Each week, we're going to have one of these 3 scenarios, and how are you going to play them? So we'll get more in depth on that. And then last week, the price alerts that were set didn't generate much, but as I get to the next segment here in the market recap, you're going to see we've been under some weakness for the last 5 to 7 days. So not a whole lot's been happening to the long side. However, we are still in a bull market, and I do have some symbols that I've taken that we will go through today. We'll set some more price alerts for next week. It says the price alerts are from Holly and the composite rating, but I honestly didn't really find anything that was great, that looked great to me for a longer term from the Holly. So I've got a short list of composite rating filters, and we'll talk a little bit about that as well. So we'll save that for the remainder, and we'll say hello to my desktop. And let's go right into, as I said, promised the market recap. And for those that tuned in yesterday, I did the same thing with Jamie, although we didn't have this green candle staring us in the face. But the point was, there's still no real bear case to be made here. The major lines, I'm going to get rid of some of these older non-relevant ones. I thought I saved that. What I want to talk about is the same thing I did yesterday, and today is just giving us confirmation that we are, in fact, hopefully building a nice base, a nice higher low, so to speak. Let's see. Oh, hello, Paul. Welcome down under. Paul from down under. So this orange line is significant, okay? Why? Because we broke out of that. That was resistance. We were staring at that 2-3 weeks ago, resistance, and we pushed through and most importantly closed above it. 1, 2, 3, many days, all right? Then we got a little bit ahead of ourselves. Markets have to breathe. So we were looking for a pullback. Now we could have dug in on this moving average, but there was a bit more meat on the pullback bone. However, the good news is the pivot line, and I'll give a pivot line, you know, a lot more credibility than I will on moving average. The pivot line held, and that's what we always want to see. The prior breakout and resistance became future support, and that seems to be the case here from Friday, yesterday, and today, pushing up and moving off of that. So again, no real bear case in sight for the S&P 500, which of course is our major market benchmark, the benchmark from which all other activities and funds are compared to. And so we always like to start with that one. Let's move over to the Qs. And as I pointed out yesterday, the Qs had a bit more of a sell-off, and that was related to Facebook, Twitter, and Google having a rough week last week, and it dragged that NASDAQ a bit lower than its respective pivot line right there. However, it did make a higher low. It did close above that 50, and nice green candle today, just peeking its head up above. We got to close back above the pivot line in the Qs. Pretty good indicator there that it's okay. It's not going to be the one loose link or the one weak link that might break. The Facebook and the Twitter and the Google stuff seems to have abated that was started last week. So NASDAQ, again, building a possible higher low for just another continuation of this juggernaut rally that we're in, bull market. And there really is no bear case to be made, especially the way we closed above that pivot line. I did mention yesterday that was the one little chink in the armor. Everything else looked great. 3 out of the 4 indexes were above their respective pivot lines, but now I can safely say that all 4 indexes are respectively above their pivot lines. I'll go ahead and mark this one up because I can just see it right there. This is the IWM, guys. You can see the resistance. We spent a long time in this range, but we did break out from it. 2 days later, held it as a support level. Market got ahead of itself. Market pulled back. And on Friday, we tested those levels early and then closed. The most important thing, we closed back above that pivot line, just like the NASDAQ did today. So 3 out of 4, the NASDAQ, that's S&P, and the Russell 2000 here, indicated by the IWM, all very healthy, all staying above their respective pivot lines. And then lastly is the Dow, which also has its pivot line roughly back in this area. And Dow's been kind of doing its own thing, because if we look back, we are not like the others. You know, the other 3 indexes I just looked at, they were playing above, they've all been playing above these January highs. But if I go back and type them in, we can see Spiders is above that January high. Qs are above that January high, and the Russell 2000 is also above that high. So this is like your father's Oldsmobile here. This is an old, archaic, out-of-date index, probably not really reflecting what's really going on, but nonetheless, the Dow looks like that, and also not really showing any signs of having to be concerned of any bear case coming in. I think that's pretty much all I wanted to talk about in terms of the market recap. Again, the highlights, there's no concerns that I can see, just continued higher lows building along the way, and all the respective pivot points are holding. Anything you want to talk about, Andy?
No, I totally agree with you, Steve. I mean, it's pretty sloppy right now. I mean, it's not the, you know, we're definitely not seeing the 1, 2, 3 pullback, power higher. You know, it just kind of, we sold off from our highs, and now, even today was an impressive day. It's still kind of sloppy and still kind of in a 4 or 5 day range there. So, but Steve's correct. Still nothing really bearish about it. It's just, I don't know how excited to get about it. You know, we'll have to see what happens. But it's kind of dovetail into when I talk about Holly too. So
okay. A couple more thoughts here. Again, like I said, the last 7 or 8 days have been consolidation, pullback, give back days, and that's why the list that was given out last week probably didn't perform as well as we would have wanted it to. So the backdrop is always important. And I happen to notice Paul's question: is the pivot line auto-constructed or manually placed? Two answers to that question. These are manually placed with my eyeballs, just looking. However, Paul, we do have a filter that's called the pivot. You can go to any alert window, you can go to any search and type in the keyword pivot, and you'll notice not only do we have the distance from the pivot, we also have R1, R2 resistance levels and S1, S2, which are universally calculated levels. Now, the way in which you would use this distance from pivot is if you added that filter. I'm not going to save this, but I could say, you know, I want it to be not below it, so 0, and, you know, maybe 0.1% above it for the most part. And so this filter configuration, as it reads right there, would help me find things that are either resting right on the calculated pivot of our platform, but no more than 0.1% above that. So it can be done in filter form, not so much in automatic chart drawing form, Paul, but the lines that are in here in the orange, those are constructed by myself. Just many hours, thousands of hours of looking at these things. So, all right. With that being said, let's turn it over to Andy, because he said he's got some ideas of what to talk about. I noticed very limited trade count today in AI. I'm sure Andy's got some thoughts on that.
Yeah, let me go ahead and show my screen here. Can you see it, Steve?
Yes, I can.
All right, so we'll take a look at the AI today. First, I want to kind of give you the backdrop going into today's session. Ignoring the candle that we had today, obviously, we had all this data going forward. And like I was mentioning earlier, we've had several days of pullback. And really, typically, when you're in like a strong stock or a strong market, when you have a bullish market like this, and you do have, geez, what is that, 7 days of pullback like that without a bar reversal, and then you had one on Friday and it really didn't do a lot. As a matter of fact, it gapped up above that high and then just kind of closed back in that range. today was interesting, but not including today. This is what we had to look at going in here. So surprisingly enough, and it's rare that you see this, there was actually as many short strategies that made the final cut that there was longs. And without going too deep into it, for those in here for the first time, to make the cut, each stock has to have a certain amount of, or each, take that back, each strategy has to have a certain winning percentage and a certain profit factor. Okay, this is optimized and back tested the night before. And so we had, let's take a look at them right here. We had Holly Neo. Okay, these are the strategies that came to play, an equal amount of longs and shorts. Let's take a look at Holly 2.0. You can see there pretty much an even amount of longs and shorts. And let's take a look at Holly Grail. And once again, pretty much an even distribution of both long and shorts. So what that tells me is coming into the day with this pullback we see in this action and kind of muddling around in this range here, that a lot of these were, there were a lot of good setting up good to the short side. Okay. Obviously we had some long strategies in there, so it's kind of an equal distribution. So where are we going to go from here? Now, if I had to guess, I would think tomorrow we're probably going to have more long strategies, but looking at today's numbers real quick, guys, risk on performed the best, which was, I was surprised, being that a lot of shorts fired today. Not only did they make the cut, a lot of them fired, which means there were a lot of short alerts. And not only that, a lot of short alerts actually worked. Now we had some biggest losers down here in Holly Grail were shorts, but look up here, you know, two of the top three were shorting strategies in the risk on column, which says basically if you got into the short and held it all day, even though the market kept going higher, a lot of these continued to work. So, you know, what can you glean from all this? I don't know. It may be that, you know, tomorrow will tell the tale, but when I see stuff like this, I don't get very excited about, you know, and just an overall, you know, market move, all sectors moving higher because, you know, take a look at the day, the oil stocks definitely led the way, some retail, but, you know, there's a lot of sectors you can see here in my thing that just didn't do a whole lot today. So thus why some of the shorts worked in the strategy. Let's take a look at 2.0. Now 2.0 did have a lot of longs fire, even though it came to the table with a lot of shorts. You can see there it was predominantly longs that fired. Okay, so that one was kind of out there on its own because the other two strategies, we'll take a look at Neo real quick and you're going to see there was pretty much actually more shorts fired in Neo, and some of the top producers were short. So, you know, I'm not gonna break down a lot of trades today because there was kind of in the risk off column probably about an equal distribution. You can see Holly Neo actually finished down there in risk off. So means if you got into a couple of these shorts right here and you gave up on it because the market kept going higher, but it still paid. Here's another one. You got out on this because the market was going higher. This still worked. So when I see things like this, it makes me a little skeptical about this move today in the overall market. We'll see. I don't know. Time will tell. But I'm just trying to show you guys a way you can take more out of the AI than just trades. Okay, you can get, you know, possible, you know, build some sort of not idea. I don't want you to be led astray, but, you know, something to keep in your back in your mind should we not have any follow through with the, you know, with the market tomorrow. Like I say, time will tell, but this was interesting to me. The number of short strategies that we had today and the number of shorts that fired based on today.
Yeah, a lot of times the short strategies can show up for the ball game, but the coach doesn't put them in the game. And Coach Hawley is only going to deploy those if there's a statistical reason to do so.
Mm-hmm.
All right, exactly. So before you send it back over, we do have a couple questions that's probably good for you. The first one was on profit factor, and the second one was how does Hawley take into account volume, roughly?
Okay, profit factor. Basically, profit factor, what that is total profits divided by total losses plus commissions. So it factors in commissions. Now, in this scenario, we don't calculate commissions in it, so it's just basically this profit factor is going to be profit, basically profit divided by losses. So when you see these incredible numbers right here, you know, bond shorty, pay attention to it. I mean, what this means is this strategy optimized and back tested over and over last night, and when it was finally optimized, these were the numbers. It had a 72% winning percentage, 4.93 profit factor. Now, we have no idea going into the day that the market's going to do this gap down and keep going higher, and so you can't just say, oh wow, I'm going to come in the morning because of this profit factor right here, I'm taking all these bond shorties. That's why Steve was pointing out this segment is it's this webinar. It's a focus on man and machine. Okay, same thing goes with Holly. Holly can give you some great ideas. It's up to you as a man / woman to make a decision, you know, whether you want to take the trade or not. But that's basically profit factor, and these numbers are incredible, and they have to have a certain winning percentage and profit factor to make the cut. So only the best strategies make the cut each day. She is equipped with 50+ strategies in our back office. Okay, she will take all those strategies and run them to the combine for probably 8 hours after the market closes to well into the evening. But yes, that's anytime you get a profit factor above 2, it's really good.
Yeah, we want to get them above 2. You get 3s and 4s. Basically, what that's saying, Kevin, is that the profits are outstripping the losses by a factor of 3 to 1 or 4 to 1. You know, what have you.
Yep.
The other quick question from Scott was, does Holly take into account volume for strategies? And then a follow-up, lots of Holly alerts I've seen have low volume. Well, there's 2 parts to that question. Yes, there are going to be stocks that that might look like they have low volume coming into today. There's definitely days where I can see pull up a strategy and this stock's only, you know, averaging maybe 75 or 80,000 shares a day. However, the filter or the strategy that it's looking for might have a relative volume of 2 or 3, meaning that today's volume is off the charts in terms of what it normally does. That's the kind of thing that I can see happen occasionally come through. Now, will a stock come through that normally trades 80,000 shares a day and it's just doing normal volume? Will that come through, Holly? More than likely it will not, Scott. So there are many volume filters in place. Some strategies look for more explosive volume than others, but volume definitely does play a big part in the strategy creation. And I kind of think what I know what you're alluding to. So the next time you see that, take a look at the chart and go, well, yeah, so last week it might have been averaging 80,000, 90,000 shares coming into today, but today it's already done 400,000 and it's only lunchtime. So that's a scenario that does happen. Keep an eye out for that. There shouldn't be strategies coming through that are very, very illiquid. That should not be the case.
Yep.
All right. So I guess
one last thing I want to point out, the classic Holly today, Holly Grail. This is our original Holly. We haven't made a whole lot of changes to it. She has different names, Holly OG, original gangster, but she had a good day today. And the reason I want to point this out is look at the risk off. Look at the risk off here. You have the biggest loser was 11 cents. That's well calculated, reduced risk. For whatever reason, profit save here for 0. She'd have held on to that one. So this is an impressive, impressive day today. And when you have risk off, that's doing pretty well. Not a lot of trades, 15 trades, and you also had risk on that was performing well as well. So a mixed bag. Once again, a mixed bag with shorts. Some of the shorts doing pretty well. So keep that in the back of your mind, tomorrow, because I thought that was interesting. All right, Steve.
Yep.
I'll pass it over to you.
Okay. All right. So I have brought up my composite rating. Now, see, it's kind of funny. We get a new toy like this, trade ideas, and everybody takes it and they go their own direction with it. Barry's going one direction. I saw Andy trying to throw out a column into one of his multi-strategy windows. Michael's going a different direction. Well, my direction is to try and find it, again, exploit the short sellers. So just to give you an idea, this is our composite rating filter. It's basically a top list looking for a lot of things. This is where the genesis of the last 4 trade of the weeks have come. for the most part. There's not much going on in here. I'm just trying to find stocks that have the stock composite rating. So now, if you guys didn't get the memo, last week it was only a custom filter that we were able to have. Well, as of Friday, this filter has been live. And so if you go to the Trade Ideas search tab and type in score, you will see the stock composite rating. And notice that it is a rating of 30 to 100. All right, well, the way we like to look at it, I say, look at it like a college grading curve, all right? You want to be in the 90s. You want to be in the A's. You know, the 80s are probably a good B rating for these stocks. The 70s are probably a good C rating. And the 60s and 50s we don't really want a part of. Those are the D and C kids, slacking off, smoking in the bathroom. So that's the genesis of the composite rating. But what I did, and why I said everybody's taking this filter and doing something a little different with it, I always like to try and find out how can we exploit the short sellers who are stubborn, who have missed something quite obvious, that our stock composite rating has a solid rating, but these guys are still in there stubbornly held. I've got my minimum, looks like it's set at 10%, okay? So knowing that, it's just two filters, stock composite rating and shorts that have more than 10% above their circulation being held by stubborn short sellers. And I have gone and I have colorized this gradient to only focus on, look at this, it's highlighted right there, short float. And so when I sort by my short float, the darker stuff is the heavy stuff and the light stuff is not so heavily shorted. Now I can sort this column and you can see why all these ones up here are very dark. 74% short the float, having a hard time if you short this thing. So that's the way I want to use this composite. And now this was the fourth week in a row, as I said, that we used. Here it is. There it is right there. There's our trade of the week, CN, S-I-E-N. Again, once again found on the composite rating. And as you probably heard me talk a lot in the past, the stocks that catch my eye visually are the ones that have had a nice move and then are going sideways. They're not going backwards, but they're just going sideways, because you can consolidate in two forms. You can pull back and consolidate in price, or you can consolidate over time, and this is a time consolidation. It's going sideways. Typically, the catalyst that pushes these things out of their sideways consolidation after a nice move is the 10-period moving average. So coming into today, we didn't have much data really. We didn't have that candle either, because that was yesterday. Sometimes I try and get tricky and see if I can fool the system into showing me what it looked like on Friday. That's pretty close right there. So not only did we have the CN coming through the composite rating filter, my new favorite swing trading scan, we had 3 buy tags. Holly was seeing things intraday. So when things start to really line up, I pay attention, all right? It's on this list. Holly saw things in the last week and a half that she really liked. I like this setup. Let's go ahead and zoom forward. And here we are. So this 10-period moving average, I fully expect, and today it passed the test, all right? We had a nice weak dip in the morning session, testing on the bigger picture, this 10-day moving average, but I always say, it doesn't matter how it is midday, it matters where it is after the bell. How does it close? And this thing found some buyers towards the end of the day. Matter of fact, I'll just go ahead and show this right now. After we had tested early morning, we had a real dry up. Look at that dry volume. Market did nothing. The price of the stock did nothing. Just went to sleep. But then all of a sudden, towards the end of the day, started to see that volume creep back in. This is how I like to use that single stock window, and I've highlighted those 5 and 1 minute candle volumes. So I started feeling a lot better going into the end of the day about how and what the stock was doing. It tested in the morning the moving average, and it passed. It passed the test by closing, and doing so with some nice volume, by the way, into the close. So there's no harm, there's no foul. Now, we did get a trigger on this stock, and yesterday we had a nice trigger and then a nice reversal. So all this tells me is that it wasn't quite ready yet. It didn't test, which it did today. It finally tested that 10-period moving average. So I'm kind of hoping for some better prices tomorrow. Don't get discouraged by this big old wick that got reversed up here. It wasn't time. Look, it did it back here again as well, which is another part of the genesis of the selection of this trade. We like the trades that have good earnings. And you can see a lot of people got smoked up here if they bought late, and then a big reversal, and then the stock dug in and then started to move higher. So I like what it's been doing the last few weeks, and this candle here tells me it does have a propensity to possibly get ahead of itself, and that's what it did yesterday. But back to today, price action was kicked right back into play. You just have to let these things develop, and that's what I'm going to talk about next, is the swing trading time frame. You've got to pick a trade, have a reason, have a stop mentally, and have a target, and then let the trade develop. You know, you can easily get frustrated yesterday watching this thing go through highs and then reverse. You know, that I don't like it any more than you guys do, but it did it. And we just have to have patience in the swing trading time frame for sure. Yeah, somebody says there's a bull flag coming in right now. The one thing about the stock, though, when we go to our single stock window, whoops, I thought that was the one. It is a little bit, and I mentioned this in the content of the email too. It's a little bit on the volatile side. It's a smaller float, only 14 million. Not a lot of shares in circulation. Average daily volumes at 380. We got close to that today. So this thing's going to be a little nasty. It's going to be a little whippy. It's not going to trade like a big old oil tanker. It's going to have some fits and starts, and that's what it did yesterday. So I don't know what else to say about this particular trade of the week, because I'm gonna move into like the next content. Yeah, physical stops, Paul, you're correct. Physical stops can be expensive. And what he means by that is, and Andy and I used to do this all the time when the two of us were running a mirrored account where people could open up an account and attach it to ours. And trust me, that's a lot of responsibility, and you want to do the right thing. And after you get stopped out on the open, which is usually, I've gone over this many times, where the algorithms find the bowling pins and knock them down on the open, shake you down, and then bounce back and go higher without you. The only way to combat that, because that's a reality, there's nothing you can do to stop it. The only way to combat it is to wake up and pay attention and babysit your stocks on the open and pull any open good till cancel market stop order. And if we get to 10 o'clock Eastern and it looks like there's no shenanigans going on, because again, the shenanigans will start right after the opening bell. That's where the market making algos try and shake down and have a stop run or a stop hunt or a mini flash crash, whatever you want to call it. The only way to combat that crap is to physically pull your stop orders. Like Paul says, physical stops can be expensive. All right. So I guess that's pretty much it. Kevin, what were the two filters on this window? I'll share this window. I have no problem sharing it, because now everybody has access to the same stuff. So I will drop a copy of this into using the cloud feature. I'm going to open up the chat window down there, and I'm going to type in Steve's CR short float scan. Control V. And whoever wants it is now in the chat window. So this is a great tool for scanning for, again, my concept here is kind of like when I go to the track, which I don't do very often. But if I have to go to the track, I always fall back on one method. You might like this, Andy. I mentioned this another time, or maybe you already heard it. My favorite method at the track is to go and find the morning odds. The professionals, they look at the morning odds and they say, hey, this horse looks pretty good. We think he's going to go off at 3-1. You're like, okay, cool. And then you look for the ones where the public just doesn't get it. They're drunk, or they don't get it for whatever reason. They're pricing the horse at 7-1. Well, I'm going to go with the expert and say, the guy who thought it was going to go off at 3-1, it's now at 7-1. Those are pretty good prices. I'm saying, what is the public missing here? And I'm going to take advantage of it. Well, the same thing is happening here. What are the short sellers missing here? And I want to take advantage of it, because if they're wrong, they have to buy to cover. And we want to get them spooked and have them create a short squeeze for the most part.
Your dad taught me that method.
Yeah, it's really simple, and it's kind of what I'm doing here. I'm asking myself, what are you short sellers missing? So that's the method. The scan is in there for whoever wants it. It's in the chat window. Let's move on to a very related topic here, and that is, I've already got a Word doc for it. So there's 3 things that happen when our trade of the weeks go out each week. First one is simple. There's no trigger. Nothing to do. Okay, nothing to do. That's scenario number 1. Well, scenario number 2 happened this week. Happened last week. The trade triggers and immediately goes in our favor. Well, good. There's nothing for us really to do but manage the risk and take profits as we see fit. A couple of ideas of taking profits in winning trades can be selling in pieces, Maybe you have a target in mind. Maybe at 5% you sell a third, and at 7.5% you sell another third, and at 10% you sell the remainder. Or you wait till all of it hits and you sell some along the way, or all of it at once. Or maybe you use a trailing stop, as Holly, our AI tool, calls it, a profit save mode. But you can always try and move your stops up along as you go. Chances are you might get hit on the open if you're not careful, if you don't pull it. But those are all good problems to have, obviously. But the one we want to talk about is scenario number 3, which is what happened this week. The trade triggers, and then it comes back into negative territory. So at that point, I want to talk to you guys about, the human nature is to do everything possible to talk yourself out of this trade, because it's not doing what you expected, and you're not making any money, and you don't feel like being patient. Well, again, patience is probably the best virtue a swing trader can have. You've just got to let things work themselves out. And you've got to constantly, trust me, your mind is constantly playing games with you. Well, should I stay in this trade? It's not doing. You've got to continue to remind yourself why you're in the trade, remind yourself of the time frame of the trade, and that the risk management that you have already deployed should remain intact unless nothing has changed. So you're continually asking yourself, has anything changed? Nope, market's still in an uptrend. Okay, has anything changed? Nope, everything's still fine. Let's bring up this next slide. Has anything changed? No. So here's our example. I drew this box to kind of show you this is our risk box. And ideally, we want to risk one of these boxes to make 2 of them on the upside, risking 1 to make 2. So as the price bounces around midday or any day and slops around, if you're in this box, you have to keep telling yourself, has anything changed? Nope. Okay, well then if nothing's changed, get your hand off the sell button. There's no reason to get out, because I can honestly tell you, I've gotten out of so many good trades because I got bored, or something happened midday that I thought might affect it but didn't, and I wanted to get out before maybe it did, and just you start talking yourself out of it. Those always seem to be the ones that want to go on without you. Let's see here. So you got to constantly ask yourself when you're in the box, has anything changed? Today, no, nothing changed. Today, nothing changed. And inside this box, there's a couple of keys we can look at. We can look at pivot levels, but honestly, there's no real pivot levels in here other than the floor of that 6-day range that's already shown up. But we did have a nice test. So let me just get rid of that and go back to real time here. We did have a nice test of the 10-day moving average, and it passed the test nicely. Now, big if this had closed in a red bar and was drooping down and looking like it wanted to drip lower into the low end of that box, well, something kind of changed. It's not holding its 10-period moving average anymore. So, one might consider, if you wanted to, you could lighten up, or you could just remember you took the trade to stay with it. As long as that box was intact, that's the area that you're risking. It's almost like buying an option. You know what your risk is ahead of time. So those are just some ideas that, I think people need to be aware of, that that swing trading requires a tremendous amount of patience. It requires a tremendous amount of staying the course, and you're constantly having to ask yourself, has anything changed? Because our personalities are wired, to want to get us out of conflict or get us out of danger. And as long as the market's open and it's gyrating between those 2 points, everything's okay in my book. So let's see, a couple points came in here. Let me just read these questions real quick. Yeah, that's interesting, Andy. You see his comment, maybe have a composite rating for the charts. Like Nike would be an interesting composite rating, right? It was up here around 100, and then it had fell from grace last week, got into the 80s and 70s, and now it's back up. So what he's saying is that a line chart might be interesting to plot the course of how a stock has gone through its journey of composite rating. Go ahead.
No, I said, yeah, that's a good idea. I thought of the idea of just having the composite score, at any given time up in the upper right corner, but now that would be pretty cool.
Track it. How did I determine that box's size? Good question, Robert. In the email that went out, I said basically, this is another whole other chapter. We're not giving out hard stops anymore because we're not going to give the bowling pins to the algorithms. All right. I believe that was starting to happen, and it was getting a little frustrating, so we had to make a change, and you always have to make a change to be successful. And that is now no longer putting out a hard number that everybody just plugs in and walks away from and gives them, the algorithms, a nice, sweet pin setup. I'm giving us a range, and so the bottom of this range is basically the 20-period moving average, and I said anywhere under the 20-period moving average would probably be a good level for stop. So I'm being much more coy and cautious without giving a specific level, but giving more of a range just to try and keep those algorithms at bay, because I think this is getting a bit more popular and it's going out to a lot of people, and these are the kind of things that they feed off of. So that was a good question. And rule of thumb, composite rating goes through 75. Oh, okay, more on the composite line. You know, friend, that's a great idea. You should write that up and submit that to info@trade-ideas.com as a feature request, and then it will sit, you know, in a pile of possible feature requests. There's Robert, and then Paul said, weird to act differently when the fear is present. I've done many years of studying this. Yes, Paul. The other thing I can add to that is it's hard to be a trader because we are wired to be the opposite. All right, especially in swing trading. In swing trading, you get paid with the two birds in the bush, but our wired humanity is wired to want to grab the bird that's in the hand and not go for the two in the bush. So what that means in reality as a trader is that you're in a good trade, you look down, you're up $400. That $400 starts to spend itself in your mind. But you look at the target of this trade, there's still 4 hours in the day. You really should sit on your hands and stop thinking about that $400 being real money and let this trade work out. Because we're wired to think, if I don't take that 400 right now, it's gonna be taken away from me, and I'm gonna miss it, and I'm gonna be mad at myself for not taking it when I had it. When in reality, you should be fearing getting out too soon and not letting a good trade develop and continue to cover the bad trades that you're inevitably gonna have. So patience is a virtue, and sitting on your hands and talking with the devil and the angel on each shoulder. That's why Andy and I always say, try and sell half. If you can't get rid of the demons telling you to sell half of your profit or all your profit, well then make an agreement, make a barter with the demon. Say, all right, I'll sell a third. Get off my back. And that usually is a good way to get rid of that that feeling. All right, so composite rating, we shared that. This is where we found our trade of the week. Chances are we might find the trade of the week again on this rating. We talked about the importance of staying in a good trade and letting it develop and not letting little intraday news events, maybe the futures fall down pretty quickly in a 30-minute candle because the president said something. That's not a reason to get out of your swing trade, guys. So just keep that in mind. You're going to constantly be fighting your own demons that are going to try and talk you out of a good trade. So going forward now, remainder here, we're going to talk about the price alerts that were set last week. And again, remember, looking at the S&P, we had a lot of selling last week. So these price alerts didn't do a whole lot. They didn't do a whole lot at all. So let's get rid of them all. And we're going to start over again. This week I've got 7 of them. And I was not able to find anything from the AI Holly that looked interesting. But coming from this list right here, I got about 7 off of this list right now that we're going to go through. I'm just going to get right into them. I'm not going to go through each one. So let's go to the first one I have. It's HIIQ. Liking, so HIIQ, we can see the score, composite score is 98. Let's go ahead and do this. Let's sort by composite score just because we can. There we go. All right, so HIIQ is also highly shorted. Oh, interesting. It's got 61% short float. That's interesting. We've got a possible cup and handle kind of building up here, bouncing off that rising 20. So we'll go back to the prior high and set it a tick higher. 57.04 is what we want. And again, there's a couple things going on here. High short float, 60%, and also high composite. This is exactly the method I would do at the track. What are the average bettors missing here that the professionals saw? Well, the professionals are the composite score, and the average bettors are short this thing by 60%. I like this setup. So we're going to click.
That has the potential of being very explosive there.
Yes, it does. Because when they realize they're wrong, it could be fireworks. Their pain can become our opportunity. All right, the next one, a former trade of the week that just didn't get going when we wanted it to get going, but now it's back in the news. Nice gap up of earnings, not much of a pullback, moving higher. Basically consolidated with the market last week, held that 20-day moving average, and now trying to come back to highs. And ANGI has a short float of 59% with a composite rating of 94. So an A student being dissed by the rest of the group. Let's figure out where the high is. It looks like it's this guy right here. So 2252 is what we're looking for. And we're going to remind ourselves CR, high short float percent at 50, rounding down. Good enough for number 2. What's next? ICPT. Oh, okay, I got to remind myself there's a couple of pharmaceuticals in here, and those are the ones you got to be careful with. Those are the ones that are, you got to be careful because there's not much control that we have overnight on the pharmaceuticals. So this one has a big short float of 28% and a composite rating of 90. Let's just go to 118.86, and then I will do something in the notes. 118.86. Warning, biotech. Caution, be careful. But 28% short, 90 composite rating. Let's go ahead and get rid of that orange line so we can see clearly what's ahead of us there. All right, the next one is going to be our EGI, Reggie. Nice sideways action. 36% short, 92%. So another A student getting picked on by the other kids. We don't like that. 27.96 is what we want. I almost nailed it on the first try. 27.96 composite rating, which they're all coming from today. 36% short the float. All right, SRPT. Kind of a funky looking one, but in the bigger scheme, it's having a hard time. It filled the gap down here close to it. Just feel like the sideways action is interesting, especially with 16% short the float. Not as solid on this one as I am on the other ones, the first 4 that I put in, so just leave that out there for what it is. 145, I'm sorry, 145.35. Rule 36. And CR rating, only 16% short the flow. Break a down trend, question mark. We got 2 more. First one is POST. Nice sideways action being held up and cradled by the 10 and the 20 period. We got 13% short the flow. So we're starting to hit the bottom of the barrel, guys, on the short float stuff. But these are still strong stocks, a 93 score composite rating. 99.60, we'll go 99.61. And only 13% short, nice consolidation. And then the last one, and then I will share these with you guys, is Tandem, TNDM. Okay, this medical instrument's not as bad, so I like that look as well. Look at this, 4 days of attempt to hit that moving average and close below it. Couldn't do it. Keeps pushing it back up, pushing it back up. Really nice little bowl formation here, if you can invent my own little word. 47.41 will go, and this will be the last one. CR, nice pattern, not much float, only 12% short, but strong stock and a strong pattern. All right, so there are our 7 working price alerts for this week and next. What's Paul saying? Angie, not a bad volume on the 15. Yeah, let's probably, a lot of times those 15-minute bars close with significant volume just because it's the closing print. Market makers are done and they get out before the end of the day, but it looks nice. Medical device industry, yeah, TNDM as well, which is the same thing as CN medical device. Yep, ophthalmology. All right, so nonetheless, let's highlight these and get these out the door to you guys. Okay, I have hit the send button. I've shared the price alerts there that you see on the screen. So all you guys have to do is just accept that code, and we all have the same price alerts in addition to the ones that you guys are creating on your own, hopefully, over there on your end. So, Andy, unless you got anything else, I don't.
No, you covered it good. We are all good.
All right, so let's get Scott in here, and we can talk about these remaining slides. Hello, Scott. Hello, Scott. Let me go to the right slide. There we go.
Missed the mute button. All right. Yeah, a couple items on the way out. We do have a podcast every week, so make sure that you're set up for that and subscribe. Just search for Trade Ideas Podcast in the app you use to listen to podcasts, and it should come right up with the subscribe button. Click on the subscribe, add us, and you'll be all set for the next one. You can also explore the archives and download some of the previous versions. We've had episodes with special guests. We just released some special guest episodes, not last week, which is our first live episode back from the summer, but the previous 3 weeks we released some special guest ones, quite good, so explore those. We have also for you a ebook that Steve and Andy both participated in authoring. Trade-ideas.com/ebook is the URL to go to. Just put in your email address there and get the download link delivered to your email. It's got 5 strategies to use when buying the effing dip no longer works, and it's been very useful to have these strategies in your trader's toolbox ever since this February. We got an event coming up. Go to TradeIdeasEvent.com to learn all about the details. Great speakers, including Brett Steinberger, Brian Shannon, JC Parrots. We've also got some other partners coming in to participate in some panels. It's going to be really exciting. Also included in the day is a lot of networking. Show up in the morning for breakfast, registration. We have a full lunch. We got a nice appetizer, cocktail networking hour in store after all these speakers as well. So it's a really worth your effort to come. TradeIdeasEvent.com. We have a code. September Days is good this month for 15% off your first month or year of Trade Ideas. I've also added this to the upgrade code list. So if you have not upgraded from standard to premium and you want to save 15%, go ahead and use that code in the upgrade path. Those of you who are not yet subscribers, remember this code's good this month. So use it, all caps, just like you see it there. I will also send that in your email reminder with a link to the replay. If you have questions for us, email us info@trade-ideas.com. Follow Steve on Twitter at TodayTrader. At Trade Ideas is another good handle to follow on Twitter. Go to facebook.com/TradeIdeasPro and like our page if you're a Facebooker. That way you'll see our updates there. We post some different things there sometimes that you can share with your friends. All right. Thanks, Steve and Andy. Thank you all.
Right on. Thank you.
All right. Thanks, everybody. I'll see you Thursday.
All right. Later on.